If you look at from the perspective of cost of ownership and environmental requirement and ease of operation, I think EV certainly makes sense. And I know there are big players from Saudi which are getting into EV infrastructure in India in big way. So from purely merit perspective, it is a no-brainer. And I personally believe that EV vehicles, whether two-wheelers or three-wheelers or your four-wheelers, each of this category has a huge future in India.
You know, CDMO is a business which is emerging. A lot of investments are going into it. We've seen pharmaceutical majors now starting off CDMO as well as one of the verticals in many cases. Do you see a big opportunity coming into CDMO or you know, as they call it, CDRMO?
Yes. So I think the fact that, let me put it this way, we invested in this particular sector, we have to believe in the sector. And India is such a huge market, and India is, as they say, pharmacy to the world. So from that perspective, and looking at whatever is happening at the global level when it comes to, you know, having your leg in another country. So if you are in India, you have to be in US. You are in India, you have to be in Europe. From that perspective, I think CDMO or CDMRO both make a lot of sense. And the fact that we are expecting a decent exit or decent outcome of this investment, it means those who are coming and taking the seat from us, they strongly believe in the sector and the story. So it is not that the sector is ending or the story is ending. The sector is only growing. So we would be very happy to look at more opportunities within the sector.
How do you look at valuation for many of the startups now? A few years back, you know, the kind of exuberance which was there, and we saw the listing and then they're fading off and then again, you know, rising. How do you see the climate now? Is the valuation much more fair, mature in that sense?
So short answer is that valuations have become better. I won't say low or realistic, but they have become better. And you know, it is I'm a bit man of controversy when it comes to startup and the valuation, and I'll tell you the reason why. See, when you're talking of an ecosystem like India, India is a massive country, 1.5 billion people, and we are capital hungry country. We need more money to come to our country. So how should more money should come to country? Only when we are competitive. So I like to take this opportunity to mention that GII, in collaboration with entrepreneurship or e-cell of IIT Bombay, we have been doing an event called Eureka GCC to promote a startup in the region. And why I'm talking about this? Because we believe that startup culture should be a balanced culture. They should not chase valuations. And that's what we keep on teaching our cohorts. Coming back to your question, see, when India needs money, so what they have to be competitive. They should do comparison with other countries. Compare the similar startups, if not the same startup, similar industry, what is happening in Europe, what is happening in US. At any point in time, you would see Indian startups at least are perceived overvalued. So that is where I always tell these promoters that when we are talking of a long-term business, why don't you take sort of a, take a bit of a back foot on valuation, try to get the best of the investor. Because if your product or your service or your solution has a strong foundation or a strong foothold, ultimately you will get what you want. So why are you in rush to realize or to monetize everything today? So that is where I would say, and I would request from your platform that there is plenty of money waiting to get into India, but they don't want to get into an expensive proposition.